Happy Friday, friends, and welcome back to another episode of the Friday Five. Jump right into mortgage rates. So mortgage rate averages from Mortgage News Daily. Conventional 30-year fixed at 6.7%. FHA 30-year fixed at 6.14%. And VA 30-year fixed at 6.16%. So another week where we're seeing a little bit of improvement in mortgage rates. Hopefully that trend continues. Number two, check out these interesting results from a recent Resi Club housing sentiment survey where current homeowners were asked about the highest rate they'd accept on their next home purchase. So obviously the percentages that said they would accept a rate of 6.5 or higher is very low. You don't start to see even meaningful percentage until you get to 6%, and then you don't get to over 50% until rates get down to 5.5%. So pretty interesting based on the fact that I think 70% of the country has a rate under 5%. And then you compare this to the current 30-year fixed average at 6.7%. And either rates need to improve a lot for people to be interested in transacting again, or they need to stay put, or they need to be more realistic, or a combination kind of those two or three. One caveat I will mention, I think this study would yield some different results if posed to first-time homebuyers who weren't currently sitting on mortgages that are below 5%. Number three, if you currently own real estate and you're interested in pulling equity out of your house, I have a caution for you. A lot of lenders will push cash out refis, and they may not offer you a home equity loan or a home equity line of credit. The honest truth of why they will push a cash out refi is because it's a bigger loan amount, and a bigger loan amount means a bigger commission than if they were to present you with home equity loan or home equity line of credit options. So here's a couple of reasons why a HELOC or home equity loan might be better. One, you get to keep your low mortgage rate on your first mortgage. Second, the closing costs and the fees on a HELOC or a home equity loan are typically less. And especially with the HELOC, you only borrow what you need. You don't borrow a bigger chunk and then have to sit on it and pay interest on the total amount. So I would encourage you, if you're looking to pull equity out, make sure you inquire if a HELOC or a home equity loan might be a better option than a cash out refi. And if you ask the lender about a HELOC or home equity loan and they stammer, or they don't have a good answer, or they dodge the question, run the other way. Number four, tax season is here, and if you're a homeowner with a mortgage, you're going to be receiving a 1098 mortgage interest statement. So what is this document? Well, it is a tax form that lenders provide to borrowers who have paid more than $600 in mortgage interest during the tax year. The form is used to report mortgage interest, points paid if you bought the house this year, refinanced this year, mortgage insurance premiums, and then a lot of times property taxes that were paid out of escrow, if you escrow, is also included on there. All of those items may be tax deductible if you itemize your deductions, so you want to make sure you hold on to that document and you either provide it to your accountant or you use it if you're filing your own taxes. Number five, this quote comes from Arthur Brooks. He is one of the premier researchers on happiness, and he says there's 4 pillars of happiness: family, friendship, work, and faith. And one caution: be careful not to over-index any one of them. You need to have balance in those 4 pillars. Thanks, friends. Have a great weekend. You know where to find me if I can help you in any way.